Good afternoon and welcome to BizTech's Asian Midday Market Watch, powered by Austral Asset Management. It's Tuesday, the 14th of February, Valentine's Day, and we have Charu Chanana, market strategist from Saxo Markets, as our guest today. Charu, good afternoon.
Good afternoon, Brian. Happy Valentine's Day to you.
Thank you very much. Valentine's Day has an added significance if you are in Singapore today because it is Budget 2023. Coming up at 3:30 Singapore time. But before we have a chat about that, Charu, let's take a look and see how markets have performed in the first half of the day. We start with crypto markets. Bitcoin is now trading at 21,723. It's down 0.51%. Ethereum is at 1,501.2. It's down 1.16%. Now, across the regional markets, in your home ground, Charu, the SGX is trading just down 0.24%. Bursa Malaysia is up 0.44%. Shanghai is just down slightly, 0.03%. But then the rest of the region is pretty much in the green. We've got the ASX, which is up 0.13%. The Nikkei is up 0.66%. The Hang Seng is up 0.13%. And rounding up the numbers, we've got the Kospi, which is up 0.6%. Charu, your view on market performance in the first half of the day?
So I think, Brian, today markets are just waiting for that US CPI release, particularly, which we should see in the later hours in our night time today when the US market opens. So, getting a strong bid from last night's market, risk back on the table. I think maybe traders positioning for that US CPI release, particularly to be softer, as has been the trend in the last few months. But particularly, I think you mentioned Singapore down, and it's being dragged down by SATS earnings today. The airline operator, right? They reported quite a miserable net income. So I think that's really dragging down on the local index for us here.
Now, Charu, what are the expectations for the Singapore budget 2023?
I think all eyes are on the budget because we are, I think, seeing this shift away from COVID measures. Like I was just mentioning to you earlier, Brian, that from this week in Singapore, you don't no longer need to wear masks as well on public transports and stuff. So I think the last of those measures that were announced during the COVID are being taken off. So that is the sense I'm getting for the budget as well. Could we see the pandemic era stimulus measures being taken off as well? Because at some point you have to get back to fiscal conservatism, and you also have to get back to your longer term goals. I think I could see those green transformation needs coming back, EV adoption being pushed higher again, digitalization being a key focus again. So I think I would think that spending would be more geared towards long term goals now than just supporting the households.
Now, speaking of turning to a longer term perspective, we switch to Japan, which the Bank of Japan has announced its new governor nomination, Kazu Ueda. What does that mean for markets and particularly for the yen?
When this news actually came out on Friday last week, I think there was a sense of euphoria, at least for the Japanese traders, thinking that the most dovish candidate, ex-deputy governor of the BOJ, Amamiya, has actually declined to take the post. So that was a sense of relief. But in Bank of Japan's terms, you are either dovish or you are less dovish. You can never really get a hawkish candidate.
Yes.
It does seem like Ueda is a little bit less dovish than Amamiya, but again, looking at the GDP data that came out this morning, pretty weak numbers still, even though the momentum is picking up. But I mean, it's nowhere close to expectations. So I think Japan's economy still needs that stimulus, and maybe we can see some small tweaks because of the inflationary pressures. But I don't get a sense of this yield curve control being completely removed. So I think the Japanese yen will particularly still continue to face pressure from that global yields that are again going higher because of US inflation being more entrenched and growth also surprising to the strong side. So I think that still continues to weigh on the Japanese yen. And when we can't really expect a pivot from Bank of Japan, then the focus really stays on the global story. But let's see. I mean, 24th February is when Ueda will be answering some questions to the parliament, and we will get some more insight into his policy direction. I think there will be a lot more volatility in the yen from here on. But I think the global story matters a lot more.
Now, I want to switch to commodities, in particular oil. Russia is cutting its output. What does that mean for energy markets?
To be honest, nothing compared to what it used to mean. Last year when Russia actually invaded Ukraine, obviously this news kind of hit global markets that we will not be getting enough supplies from Russia. But now I think there was obviously this expectation already setting in that Russia is not able to get enough demand for its products, and thus it's trying to boost prices by trying to cut its output. And secondly, I think now Europe has diversified its energy sources a lot more. It has energy deals with the US, and at the same time, it's also trying to get a lot more LNG from many different countries. So the dependence on Russian energy globally has actually gone down. And we could see, I mean, we did see a lot of price action when the announcement came through on Friday, but oil is now back again lower. Also, kind of helped a little bit by US releasing some more crude oil from its strategic reserves. So overall, I think the focus for energy markets is not really on the supply side. So far, in the short run, supply seems okay. The real indication that we are actually waiting for is that pickup in Chinese demand. So far, so much anticipation has already built around it, but we haven't seen activity numbers start to improve yet. I think that's where the focus is. And if we do see that Chinese demand coming back, then I think we could see oil prices going a little bit higher, but
Then,
potentially has to wait until the next quarter.
then Charu, the question then begs: what is the price range that you're looking at Saxo for oil in the near term?
So we are looking actually at a very range bound kind of oil prices, maybe around $80 or so in this quarter, jumping up a little bit higher to about $90 or so in the next quarter if we do see those indications of Chinese demand coming back. But we don't see it getting above $100 this year because the near term supply issues are a little bit more limited at this moment.
Charu, as always, thank you very much for your insights. Thanks for coming on the show.
Thank you, Brian. It was such a pleasure to speak with you.
Now, we've been speaking to Charu Chanana, market strategist from Saxo Markets, on BizTech's Asian Midday Market Watch, powered by Austral Asset Management. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.